Hello, I'm Bernard Hickey from interest.co.nz and welcome to an economic weather report brought to you in association with ASB. Today I want to go off the beaten track a bit and talk about something I call the China syndrome. Now you may know the China syndrome as the situation where a nuclear power plant melts down and in theory could melt right through the earth and out the other side. Of course we know that doesn't happen, but from an economic point of view there is a risk for the global economy of what I call the China economic syndrome. It's worth looking at this because New Zealand is increasingly dependent on the sort of trade that China does and how it affects the rest of the world. Let me explain. China has become the world's factory in the last decade or so. Many of the products we consume and the rest of the world consumes are made in those factories in China. So when those factories start to slow production sharply, we need to take notice. That means demand from the world's consumers, particularly the rich ones in Europe and the United States, is slowing very quickly. And what we've seen in the last couple of weeks is a very quick slowdown in Chinese factory output and in exports, which it depends on. A couple of numbers are worth looking at. Firstly, Chinese exports fell 2.2% in November. This is the first fall in 7 years. Previously, it had been growing at rates of 15 to 20%. Secondly, imports fell nearly 20% in November. You might ask, why should we care about imports in China? Surely it's all about the factories and their exports. Well, of course, to make those exports, those factories in China actually import the bits and pieces that get made into those exports. Intermediate goods, they're called. And so when you see a 20% fall on imports, that often means in the next month and the month after that, the exports of those bits and pieces, all combined into a single product, drops as well. So there is a signs there of a very quickly slowing Chinese factory sector. Now all this means that there are now serious deflationary pressures building through the Chinese economy. And in the last 24 hours, we've seen Chinese inflation in November slump from 4% on an annual rate to 2.4%. Chinese inflation, if you can believe it, is now half New Zealand's inflation rate. And it was well below what economists had forecast of about 3%. And you can see here in this chart how Chinese inflation went up and now it's sharply falling. That is a sign of a very quickly slowing economy, particularly with exports. And China has had its problems with letters of credit, where trade hasn't happened because the banks don't trust each other enough to give each other letters of credit. China is important to New Zealand. It is our third largest trading partner behind Australia and America. It's our fourth largest export market behind Australia, America and Japan, and our second biggest source of imports behind Australia. But the real issue here, the linkage between us and China, is through Australia. China is now Australia's largest trading partner, and by a long shot. It really makes sense to have a Chinese-speaking Australian Prime Minister. How does this affect us? Well, less demand from China for commodities, particularly Australian commodities, is likely to push Australia into a recession next year. And it, of course, buys a lot of our manufactured exports and a lot of our commodity goods as well. And China's fall will drive down commodity prices, and we've already seen that not just with the oil price, which is down $100 a barrel, but also with dairy products. Interesting factoid from the last day or two, China's oil imports actually fell in November. Stunning. So what is this all likely to mean for us here? Well, it's going to be tough for exporters to China in the next year or so. It's also a chance for importers to try and get very low prices from China. They're probably trying to offload stuff cheap right now. All in all, it also means a likely recession for Australia and increased pressure on the Reserve Bank here to cut the official cash rate even deeper. I'm Bernard Hickey. That was a special economic weather report on the China syndrome, brought to you in association with ASB.